Hello students, welcome to the exam oriented Brahmastra revision for CA Inter Audit, and we are going to cover bank audit in this particular chapter. I'm not going to waste time in my introduction, who am I and why you should trust me and stuff. You can go to my channel, YouTube channel, the Audit Academy, and you can find out for yourself. Alright, but I will straight away come to the points now because I know you may be watching this video on the day of exams, and that is why you want me to move with this topic ASAP. Now when it comes to audit of banks, so first of all, these are my summary notes. Okay, all right, done. So these are my summary notes when it comes to audit of banks, and I have ensured that I cover up the entire part of the ICI module adequately in this particular set of summary notes. Okay, first things first, where you will find these notes in the Telegram channel, and where is the link of the Telegram channel? In the description of this particular video. Okay. Now, when it comes to audit of banks, what is the weightage placed? Now, weightage is combined with audit of different types of entities. So, audit of different types of entities chapter and audit of banks chapter, both of them combined together, the weightage is of 12 to 18 marks. Okay. So, obviously, what I have seen in the old course, similar weightage has been carried forward in the new course. What I feel is that around 8 to 10 marks will be audit of banks, and the balance 8 marks or so could be your audit of different types of entities. So, or it could be 8 marks audit of banks or 6 marks audit of different types of entities. But normally for 8 marks we have seen this topic of audit of banks, alright, even in the old course. So now, so it will continue in the new course also. So now straight away coming to the discussions, what kind of points are there and what kind of things you need to remember. This video will be in 100% English, alright, because I'm shooting some revision material for South India students. If you want to see in English, Hindi English mix, so either there will be a revision video on my YouTube channel separately, or if there is no such video, don't search for it. Then in that case, you can come to my mobile app and you can see audit of banks chapter, and how to download app and stuff is given over here, alright, in the description. तो वो आपको हिंदी इंग्लिश में देखने मिल जाएगा, हिंदी इंग्लिश मिक्स वर्जन में. Okay. Now over here, audit of banks में the very first topic is different types of banks. What I'm expecting, is some kind of MCQ over here when it comes to different types of banks. So even if you take a walk of around 5-10 minutes across, even in and around your house, then also you may end up seeing so many such kind of banks. So how many types of banks have been discussed? Just think about practical example: commercial bank, Kotak Bank, Yes Bank, regional rural bank, Grameen Bank, alright. Then cooperative banks, wherever you see Sahakari, alright, or cooperative, that is cooperative banks. Payment banks, Paytm Payment Bank, shut down now, alright, or Airtel Payments Bank. Okay. Then development banks, IDBI and stuff, development banks. And small finance banks, Ujjivan Small Finance, Equitas Small Finance, AU Small Finance. Okay. Now how to identify which type of banks? Commercial bank is very simple, most widespread banking institution, and the main functions are accepting deposits and granting advances. So it is very simple. Regional rural bank, you will clearly see in the exams, dash type of banks are set up in rural areas in different states of the country, alright, for rural communities. Then you will easily be able to find out that it is regional rural bank. For cooperative banks, they will say it is set up based upon cooperative principles. That means people will cooperate with each other, alright, and not selfish principles. Now this one, please be careful. It normally caters, that means it serves the needs of agricultural and rural sector. So what I feel is that in exams you will get this rural sector and you may end up marking regional rural bank. Please be careful. If they say agricultural and rural sector both together, then please ensure that you are marking cooperative bank, alright, and you're not just going for regional rural bank. Please be careful in this particular area. Alright, payment banks, come on man, you may have used Paytm Payment Bank or Airtel Payment Bank, alright. So these are normally this online banking which you see. So this Airtel Payment Bank, okay, they can accept very limited amount of deposit, okay, otherwise it is usually used for payments only. They are allowed to accept restricted deposits, but these kind of banks cannot issue loans and credit cards. Please be careful for payment bank. Please be careful in this area for payment bank. Okay, customers can open current and saving account, that is fine, but it cannot have its own credit cards, or it cannot issue loan. Okay, please be careful for payment bank in this particular area. Example is given over here. Development bank, to provide funds for infrastructural facilities. So I am just giving you the main trigger words. The moment you see these words, these kind of words, you will understand what you're supposed to mark. So infrastructural facilities, that is your development bank for economic growth of the country. Small finance banks, to give banking facilities to the unserved and unorganized sectors like small marginal farmers, small and micro units and stuff. So to serve the small borrowers. Okay. So for that you have this small finance bank. Yes, yes, yes. So please ensure that you are just looking at the trigger words. ऐसा नहीं होगा, it will not happen like this that they will just ask you to explain all types of banks at once and stuff. They are not going to ask you a 10 marks question. So I hope you are done with this different types of banks. Everyone is aware about Reserve Bank of India. Reserve Bank of India is the topmost regulatory body when it comes to banking system. Yes, sir. RBI is responsible for what? See, please understand. Last line of the question will be very important for such kind of answers. So RBI is responsible for what? Normally also you can write it regulates the banking sector, it regulates the currency, alright, it regulates the policies, alright, all the monetary policies, the repo policies, this policy, that policy. Alright, so look at this. RIP. RBI is responsible for RIP. No satire intended over here. So RIP, regulating the activities of commercial bank, then Indian financial systems development, okay, and all the monetary policy determination. Now what is Indian financial systems? Alright, your banks and NBFC is Indian financial system, correct? So RIP, regulating the activities of commercial and other banks. I for Indian financial systems, and P for policies. Which policies? Monetary policy, not security policy, right? Okay. What are the main functions of RBI? Please be careful if the last line of the question says function, function, function. Alright. Then in that case you talk about CCB. Currency issuance, currency regulation, and it acts like a banker to the central and state bank. Obviously when it comes to Indian currency issuance, regulation, all that is done by RBI only, and then it also acts as a banker to central and state government. So today if central and state government want to do banking, then from where they are going to do? Obviously from RBI. Alright, and it also acts as a banker to other banks also. If the banks themselves want a banker, then it is RBI only. Alright, yes sir, yes sir, yes sir. So please be careful when it comes to RBI. These are the two main points. Yes. Okay. Now conducting bank audit. Let me tell you, this whole bank audit chapter, if I want to divide it from the angle of students, then it is divided into two parts. One is very interesting, where we talk about loans, advances, non-performing assets and stuff. And the second part is the boring part, other points. Okay. Normally, 8 out of 10 times, the question is from this area, the advances, the non-performing asset and stuff. From that particular area, you have the question 8 out of 10 times. But sometimes the question could be from other area also. And I have seen that many a times when the question is asked from other points, small points, students end up scoring 0 because they have no idea about those points. And that is the reason. Even though it may be risky for the views of my YouTube, but that's fine. I just don't want to do the decorated discussion of just non-performing assets and advances and stuff. That I'm going to do, don't worry. But I also want to take up the boring discussion which involves these kind of points, alright, which students are not well prepared with. Okay, because my ultimate objective is that you end up scoring good marks. Okay, so please stay with positive mindset that we want to score an exemption over here. Look at this. Conducting bank audit. For conducting bank audit, it's like practically they are telling you as an auditor what you're supposed to do. Then there are some points, some audit related points, some account related points. So I've given that heading, conducting bank audit. But whatever you see in the red ink over here, I think I just forgot to do this red. Alright, so whatever you do, see this in the red ink over here. That will be the last line of the question, which will help you to understand, okay, that this is going to be the question and XYZ is going to be my answer. Okay. So please focus on the question. Even if you're able to remember two points of the answers and you're not able to remember all the points, that's fine. Don't worry about it. Alright. Regulatory framework governing bank audit. Very easy. Think about all the laws and regulations which are governing banking system. I repeat, think about all the laws and regulations which are governing banking system. Alright. So Banking Regulation Act 1949, Reserve Bank of India Act 1934, Companies Act 2013, then that Payment and Settlements Act, RBI Act is an SBI there is also a separate act, Regional Rural Bank Act, then the nationalized banks have their separate act. Alright, so you can write so many acts over here. Look at this. I have given a code word and I have given the names of few acts. Please ensure that you are remembering that. Okay. So that is the third point. Fourth point. Peculiarities, features involved in bank audit. I mean, what are the main features of a banking system? Yeah. Volume is high, complexity is high, they are widespread geography, technology, highly technical, regulated by RBI. Alright. Just talk normally about banking system and you are done, right? Okay. So you have clear code word and this is how you are going to answer. So this is revision lecture, that is why I'm going a little faster. Alright. Okay. Fifth point. Types of bank audit report to be issued generally. See, please listen to me. As a statutory auditor, audit, we have our audit report. This is normally in addition to the main audit report. In addition to the main audit report. What are the other reports, alright, that a bank auditor normally issues? For that I have created this Ghosh list. So I will tell you Ghosh list. Alright. Now Ghosh, Mr. Ghosh was appointed by our government to recommend how to improve the banking system to reduce fraud. Mr. Ghosh and Mr. Jilani. Alright. And their committees gave certain recommendations. Those recommendations became RBI circular itself. So whether those Ghosh committee recommendations have been implemented or not, auditor needs to give a report on that. Then L for LFAR. You know that CARO 2020 is not applicable to a banking company. Why? Because bank ko alag se they have given LFAR. LFAR has been prescribed by RBI. It is nothing but additional reporting requirements. There are certain questions which RBI has asked and the auditor needs to reply on that. Then irregularity in the working of a bank, that is also a separate report that goes. SLR, CRR, SLR statutory liquidity ratio, if you have heard in economics or somewhere up till now. Alright. So there is a report on that auditor needs to issue. Then whatever are the bank's investments and securities and stuff, alright, that is called as treasury operations of the bank. Okay. So there is a report, separate report on treasury operations of the bank also. There are many other reports, alright, but if you remember 3-4 then it is great. So normally the types of bank audit report in addition to the statutory audit report that are issued by the auditor himself. Alright. Yes, sir. Okay. Then sixth point. Yes, so small points. Understanding the accounting system of the bank. Now, if you are the auditor, you know that when it comes to bank's accounting system, normally the bank's accounting system is computerized. Alright. Ab jab bank's accounting system when it is computerized, alright. So obviously as an auditor I will be worried whether that computer program is proper na. Whenever RBI comes out with a policy or rate change, whether that computer program can incorporate it or not. Alright. So understanding the accounting system of the banks. Computerized environment. Auditor should be satisfied whether all the norms, parameters as per latest applicable RBI guidelines are incorporated into the system. Now listen to me, this was one of their favorite correct or incorrect in the old course. Alright. In the new course, as per the mock test paper which we saw of May 24, correct, incorrect were not encouraged that much. And that is the reason that we really don't know how much will be the part of correct or incorrect in the paper. But if at all, it still remains important. Then this is one of their favorite line. That as an auditor in a computerized environment, I will be worried whether all the regulations have been incorporated into the system or not, whether the system has adopted all the regulations. Okay. I should not assume that system generated information is correct. I should test the system, that particular data, and accordingly I should move ahead. I just can't assume that just because it is computerized it is correct. Alright. Then seventh point, drawing an audit plan. As an auditor, when you want to draw the audit plan of a bank audit, the code word is prof. First, plan banana hai na, you want to develop a plan. So first see your own previous report. Alright. Then do a little bit of risk analysis. That is normal in standards auditing. We keep on saying the same thing. Alright. So we need to do a risk analysis, risk of material misstatement, audit risk, whatever you can write. Alright. Then we should also observe the operations of the bank. Because only if we know all the operations of the bank, then we can develop some kind of plan. Alright. And then we should also analyze the features of the bank, especially such areas, alright, where there can be some fraud and error. Alright. So prof. Auditor should draw the plan based upon prof. Alright. Okay. Then if I am the auditor of a bank, I will have my articles, my team, right? Okay. So that is called as engagement team. Now, when I am sitting with my articles, with my audit team, all right, there are certain discussions that I need to do. They are just asking a question on matters to be covered in such discussion. Now, what I will discuss? Hey, wow, you're wearing nice t-shirt today. No. Obviously, I'm going to discuss about, see, here there can be error. See, there can be a fraud. Hello, we are going to perform this test of control. We are going to perform this test of detail. All right. So look at this. Error, fraud, risk, response. Error, fraud, risk, response. Error, fraud, risk, response. All right. So I'm going to discuss a article. There are certain errors that are more likely to occur. Be careful. Take out that headphone. All right. Then, hello, last year there were so many errors. So we have to be careful this year also. Errors identified in the prior years. All right. Then, you know what? Management may use this XYZ method for fraud. Be careful. I need to tell them how management may commit a fraud. All right. Then, risk response. Now see, these are the risks. Okay. Now we need to respond by sitting late. So error, fraud, risk, response. Just remember these lines. Okay. For engagement team discussion. In that engagement team, audit team. All right. In that engagement team, audit team. Why do we need to discuss? What are the advantages of such discussion? It will help team to share ideas. It will help team to understand things in a better manner. It will help team to perform audit efficiently, effectively. You should show some courage to write the answer, yaar. Alright, look at this. It will enable the engagement team to consider an appropriate response. It will help the partner in giving the work, alright, to delegate the work. It will help the partner to understand whether my team will be able to do this work or do I need to involve specialist. It will help the partner to understand whether the team has done the work properly or not. Alright. So that is why we keep on discussing things, right? Ekdam common sense. Engagement team discussion. What are the advantages? Okay. Then I'm expecting good MCQ kind of questions from this particular box. Otherwise, all of these boxes normally that we studied were theory questions only. Accounts and audit technical requirement. Now, when it comes to banks' financial statements, I repeat, when it comes to banks' financial statements, the financial statements of the banks are prepared as per third schedule to the Banking Regulation Act 1949. All right. Now, Form A of third schedule is balance sheet and Form B of third schedule is P&L. All right. You know that Schedule 3 of Companies Act 2013 is not applicable to banking company, right? It has its own format. And banking company is not following Ind AS. Bank follows accounting standards only, AS, and not Ind AS. All right. They follow accounting standards of the ICAI and not Ind AS. Okay. Now this is about accounts of the bank. Now let me talk about the auditor of the bank. Okay. Now when it comes to the auditor, there are certain points that they have given. This is very incomplete. More things you are going to study at CA final level. Alright. So appointment of auditor. Now, as per the module, it is complete, don't worry. Auditor of nationalized bank is appointed by, so auditor of, see how you are going to study. Auditor of, appointed by, whether RBI's prior approval is required or whether central government's prior approval is required. One more time. Auditor of, appointed by. Okay, auditor of, appointed by. So stay focused, please. So auditor of nationalized bank, appointed by board of directors of the bank. Whether RBI's prior approval is required, yes, it is required. And whether central government's prior approval is required, no, it is not applicable. Okay. Auditor of regional rural bank. I repeat, auditor of regional rural bank. Alright, appointed by the bank. Board of directors. Bank means board of directors. RBI's prior approval required, not applicable. Central government's prior approval required, yes, 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 yes. Alright. Auditor of banking company, generally all the banks. Appointed by AGM of the shareholders. Appointed by AGM of the shareholders. RBI's prior approval required, yes. Central government's prior approval required, no, not applicable. Alright. So please be careful. This is something that you will have to by heart. I repeat, this is something that you will have to by heart, you will have to memorize. Alright. And listen to me. When it comes to auditors' remuneration, State Bank of India, nationalized bank, alright, the remuneration is fixed by RBI in consultation with central government. Isme na all of a sudden don't bring Comptroller and Auditor General of India. I hope I am clear with this. Yes. So one more time, chalo. Appointment of auditor, nationalized bank. Who appoints it? Board of director. RBI prior approval required? Yes. Central government approval required? No. Regional rural bank. Who appoints board of director of the bank? RBI prior approval required? No. Central government prior approval required? Yes. All other banking companies, who will appoint? Shareholders. RBI prior approval required? Yes. Central government? No. Alright. Am I correct? If I was incorrect, then please write it in the comment box. Okay. Remuneration of SBI nationalized bank fixed by RBI in consultation with central government. Done. Okay. Audit of banks. Auditor's report. Now listen to me. This has also been a 4 marks question. Tell me. In audit report, what do we see?
Sir, true and fair view. Opinion. Opinion on balance sheet. Opinion on P&L. Sir, then if there is any other statutory requirement where law wants us to comment upon certain matters, then we comment it.
Even if you have this much knowledge, still you can score 2 out of 4 over here. Look at this. They are saying that in case of auditor of nationalized bank and SBI, these 2 banks, they directly function under the control of central government. So they have to make auditor has to make a report to the central government. Obviously RBI also regulates them, but auditor has to make a report to the central government, in which he has to state the following. Now look at this. State what? True and fair view of the affairs, any balance sheet. Alright. Then whether it has been given the necessary information and whether it is satisfactory. Okay. Whether or not transactions of the bank, look at this, whether necessary information has been given or not, and whether it is satisfactory. So whether you have obtained sufficient and appropriate audit evidence. Alright. Okay, then look at this. Whatever are the transactions of the bank, whether they are within the powers of the bank. This is something new. Alright. This normally we don't have in all audit report. Then whatever accounts have been received from branches, offices and stuff. Alright. Whether it is adequate, whether it is proper. So one point is on branch accounts. Alright. And then whatever any other matter that he wants to bring to the notice of the central government. So we understand one thing, that one is his opinion. Second just says whether sufficient and appropriate audit evidence is available. Third is about powers of the bank, whether the transactions are within the powers of the bank or not. Fourth is about branch accounts. And fifth is about any other matter which he wants to bring to the notice of the central government. Come on, so this can be a proper 4 marks question. Yes sir, yes sir, yes sir. Alright. Now LFAR, long form audit report. I have been shouting at the top of my voice. LFAR is nothing but additional reporting requirement by RBI. I repeat, what is LFAR? Additional reporting requirement by RBI. Yes, yes, yes. I know it was written over here, still I wrote it just to get your attention. So there are certain questions that RBI has asked, and auditor has to reply upon those questions. So it acts as like an addition to the audit report. Alright. And all the statutory central auditors, I mean the main auditor of the bank, has to submit LFAR to the banks latest by 30th June every year. Alright. In Inter CA module it is written 30th June every year. In finance year they've written that needs to be submitted to RBI within 60 days from the receipt of the audit report. So basically you follow your Inter CA book and please ensure that you put the deadline of 30th June every year. Alright, because I just said that, so if you have heard from somewhere else about 60 days or so, alright, then there is a problem mixture over there, but that 60 days point is given in a finance year module. If you have not heard about it, just ignore it. Alright, so 30th June every year LFAR deadline. I can expect this in your MCQ part. I hope I am clear with this. Yes. Okay. Now, one more MCQ line. In your statutory audit report, it is compulsory to state the number of unaudited branches. I repeat, in the statutory audit report, it is compulsory to state the number of unaudited branches and what were the advances of those branches or income of those branches. So, okay, total advances given by the bank 100. From the unaudited branches, it was 20. As a quantification, you will have to give. Alright, so this has also been asked at even at final C level MCQ. So it is possible that they can ask at your level also. Am I clear with this? Yes sir, yes sir, yes sir. You can pause a little bit and revise whatever you have done up till here and then move ahead. That is a better way of going forward in this particular video. Okay. Next, application of essays in bank audit. Now listen to me. If you have no touch about standards or auditing, you don't have any revision, nothing, and straight away you have started with bank audit, then this is where in these couple of things answers you struggle a little bit. Alright. But agar aapko thoda comfort, if you're a little bit comfortable when it comes to standards auditing, then you can do this easily. Okay. So everyone over here, application of essays in case of bank audit. When auditor is starting his audit, then they will ask you this question. So auditor is starting his audit of bank, and what are the initial considerations by the statutory auditor? What are the initial considerations by the statutory auditor? So if you feel that, sir, it is too technical to remember, then you just go with this code word. I eat CD. What do I eat? CD. I for internal assignments by the bank. Tell me everyone, if you are the auditor, can you provide internal services like accounting services and stuff to the company? No, na? To common sense, you will easily remember. These are the initial things that I need to be careful about. Okay. E for I need to have my engagement team. I need to have my resources, my Avengers. Okay. Then A for I need to assess the risk of material misstatement. I need to assess what can be the risk in this particular engagement. Alright. Then T for my terms should be very clear. My scope, agreement, everything should be very clear. Alright. C for this is one of the most important requirements at CA final level. You will understand, and in practical life also you will understand that whenever you are accepting a new audit, it is very important for you to communicate with the previous auditor. So communication with the previous auditor as per code of ethics of the ICAI. Alright. And then D for auditor has to submit a declaration of indebtedness that none of his audit team members, firm, staff, alright, partners or relatives are non-performing asset. Alright. So we are not non-performing assets, that we have to give it to them. Alright. Okay. So if you can remember everything, then fine. At least I eat something 2-3 points over here, because this has been very important. Alright, from the exam point of view about initial considerations by the statutory auditor. So these are all those boring questions which can kill you in exam. So please be careful. Next, understanding of the risk management process. Relax. What do you understand by risk management process? It is nothing but internal control system. Now, if you have done chapter 3, which I know is a nightmare, risk assessment and internal control. Oh my God. Okay. Then I know, that you may be aware about this concept, but if you have forgotten it, then it's also fine. So this is nothing but in chapter 3 we called it as components of internal control. Same answer is getting repeated. Forget about it. If you get a question on understanding the risk management process, now if the internal control of the bank, first of all, it should have a proper work culture. Alright. Then the bank people themselves should know what can go wrong, how much can go wrong, where there can be error, where there can be fraud, risk analysis. Then they should have a proper information system of recording every transaction from start to end properly. Correct? Yes. Then in that entire system, there should be no error or fraud controls. Right? And then they should monitor this properly. So quick monitor, first have a proper control environment, work culture. Then you should have a proper risk assessment process of the entity. Yes. They should sit and think what can go wrong, how much can go wrong. Then they should set up a proper information system relevant to financial reporting, accounting system. Alright. Then they should have proper controls over it. Okay. And then they should also monitor the entire system. If they have this, then they have a good risk management process. Alright. So please ensure that you are reading it properly. Yes sir, yes sir, yes sir. Okay. Some technical terms in banking industry. As an auditor, when I am the statutory auditor, there are so many other audits also happening. So there are so many other inspections also happening. So sometimes we also use the reports of others to get more understanding. So they are saying that as an auditor, you may rely or review other reports also. Yes, sir. Alright. Then what are those reports that you use? Can you give 2-3 examples? Simple. So my own last year audit report. Then their internal auditors report. Then their concurrent auditors report. Then their RBI inspection report. Alright. Just name different people and just write the report. Alright. Look at this. So I gave so many examples, you can write any 3. Then one more word you should be aware of, because if they ask you a question about explain the following terms or something like that, stress testing. The banking system, they have to test what if there is a stress tomorrow. Now stress can be that all of a sudden that pandemic situation, alright. So all of a sudden, let us say economic goes bad, or let us say the volume increases 5 times, 10 times of what is currently going on. So what if there is a stress on the balance sheet? What if there is a stress on the system? That is called a stress testing. Alright. all commercial banks shall put in place a board approved stress testing framework. Yes. So what is stress testing framework? It is a software testing activity that will determine the robustness of the software. That is for internal system. So दो type का stress testing होता है. One is on the financial statement, one is on the internal system. On the internal system, they will do like stress testing, load testing. What if the volume increases 4 times, 5 times, then what will happen? Yes sir, yes sir, yes sir. Then listen to me. If you have ever heard about banks, balance sheet, P&L and stuff, you know what? How much minimum capital bank needs to maintain? That is also prescribed by RBI. That bank has to keep so much of liquidity, bank has to keep this CRR, bank has to give this SLR, bank has to give this minimum capital, bank has to. Now, from where RBI comes to know about these things? RBI को knowledge कहाँ से मिलता है? Now, all of these countries, alright, many countries in this world, they are a part of international banking regulations, which is headquartered in the city of Basel in Switzerland. So whatever is decided over there, that is called as Basel framework. Now Basel III is the third agreement which was signed over there, alright, and which was approved by Basel Committee on Banking Supervision, which mainly focuses on risk to banks and the financial system, and that is called as Basel Accord or Basel Agreement. Alright. So as an auditor, we should be aware about this, whether this particular Basel Agreement they are implementing properly or not. Yes sir, yes sir, yes sir, yes sir. Okay. So up till here, you know, there are few points which you may not have felt that great, but still, you know, we have to eat that medicine to score marks. From 14th point onwards, the discussion becomes very interesting, alright, which is about discussion on audit of advances, alright. So please be careful and please ensure that you are looking at this video properly from here on, even if you are sleeping till now, alright. Okay. So when I say advances, it is nothing but loan given by the bank, correct, to XYZ person. So we'll be very quick with this because you can easily understand this, alright. Now, when it comes to type of advances, whatever loans bank is giving. So when bank actually sometimes transfers the money, when I give you loan, I will transfer the money to you. Many times what happens that bank is not actually transferring money. Bank is just giving you a guarantee that don't worry, you can do this transaction. If you're not able to pay, I will pay, don't worry. So there are two types of loans, funded loans and non-funded loans. Funded loans are those loans where there is an actual transfer of funds from the bank to the borrower. Whereas non-funded loans are those loans which do not involve such transfer. Alright. Okay. So bank guarantee, letter of credit and stuff, all those are non-funded loans. So these things can be asked in proper small application based MCQs. Alright. Now when we talk about funded loans, so there is a code word to remember. Topic of bill and demand. Topic of bill and demand. So look at this. Topic: term loans, overdraft, participation on risk sharing basis, interest bearing staff loans, and cash credit, bills discounted, and demand loans. I just read it, we will not understand. Term loans, everyone understand, whether it is short term, long term, loan given to you, simple. Or more major loans are covered under these top loans only, term loans only, sorry. Cash credit, these are short term credits given to the manufacturers and stuff to finance their working capital. Cash credit and overdraft both. Demand loans, so I give you a facility that, you know, okay, this loan I am giving to you. There are two types of demand loans. One, whenever you demand, I am going to give you a loan. Second, I give you a loan, alright, and whenever I demand, you have to give me the payment, alright. So those are demand loans. Okay. Bills discounted and purchased. So bills of exchange, I think that everyone understands at interest level. So this is revision lecture, I keep my pace. Participation on risk sharing basis. So 3-4 banks will come together and they will participate, joint loan, something like that. Participation on risk sharing basis. Alright. And interest bearing staff loan, employee loans, interest bearing staff loan. Okay. So topic of bill and demand. Advances comprises of funded amounts by way of this code word. Legal requirements of disclosure in the balance sheet. This they can ask in a proper application based MCQ. So let us say if total 100 rupees loan is given by the bank, then that 100 rupees can be seen from 3 angles. Sir, 100, 100, 100, 300. No, I am saying that we can describe 100 in 3 different manners. Like currently you are my student. For someone you are their son or daughter. For someone else you are something very special. So I am describing you only, right? But 3 times. Okay. So legal requirements of disclosure in the balance sheet when it comes to advances. So this total loans given by the bank, they need to be described in 3 different ways. First of all, based upon the nature of advance, which I just explained. Alright. Then nature of security. Out of this 100, how much is secured, how much is unsecured. Alright. So secured, unsecured, or covered by bank guarantees. Then Geographical classification. Advances in India, advances outside India. Acha, in India also how much was given to agriculture, education and stuff. So priority sector, public sector, banks and others. Alright. Outside India, how much is supposed to be taken from other banks? How much is due from others? Alright. Then bills purchased and discounted. Everyone understands. Syndicated loans means group of banks coming together to give a loans. And others. Syndicate means group. So, but do we need to remember everything? No. Broadly, you just need to remember that there is a legal requirement of disclosure in the balance sheet that this 100 rupees total advances given by the bank need to be described, need to be shown from 3 different angles. Alright. Okay. Classification we can say. Now, classification of advances. See, that is why I did not use the word classification over here. Actually, this is a proper classification. Okay, by the nature of advance, by the nature of security, alright, a geographical classification. So this is proper classification. However, in exams, if you get classification of advances, then just explain 2 types of classification. One is sector wise, second is security wise. So sector wise, how much was given to priority sector? So RBI has come up with a list of priority sector, agriculture, education and stuff. These are priority sector, and how much was given to other sector. Alright, so priority sector and non-priority sector. Security wise, now I'm going to be a little fast with this. Come on. So today, if I give a loan, alright, to you, and you give the documents of your house to me, then your house is the main security, principal security. But I say no, I'm not just satisfied with this. Your house is the main security, against that I'm giving you a loan. But you need to give me some more security. Right? You need to give me some more security. Then your father gives a guarantee to me. Right? That is collateral. So primary security is the principal security, the main security one against which credit has been extended by the bank. Whereas collateral security is the additional security. Yes sir, yes sir. So I think that should be enough. Mode of creation of security. Now we need to be quick with this. If I take a home loan, then I am going to stay in that home. I am just going to give the title deeds to the bank. Yes, I am going to stay in this home. So what is this called as? Mortgage. Alright. Mortgage. Such kind of application based questions will be asked. Gold loan. What is gold loan called as? Pledge. What is car loan called as? Hypothecation. When you take a loan against LIC policy, what it is called as? Assignment. Sir, but how do we identify the difference between all of this? That is why I'm telling you, stay focused. Now everyone over here, how to find out? You'll have to look at property, ownership, possession. So mortgage always involves immovable property, like home loan. Keep this home loan in your mind. Possession will be with the borrower. I'm going to stay in my house. Ownership, obviously, of the borrower. It is my house and I'm giving it to you. Alright. So property, immovable, ownership, borrower, possession, borrower. Similarly, now tell me for gold loan. Alright. Okay. So gold loan, how do we get this gold loan? What is the transaction? That I'm going to give my gold to you and I'm going to get a loan against that. So this is a movable property. Possession is with the lender. Alright. And ownership is of the borrower. Alright. It is my gold. Okay. Hypothecation, remember the example car loan, movable property. I'm going to drive the car, so it is my possession. Obviously, it is my car. Okay, but till the point of time I don't pay the last installment. Alright, this is the bank is entitled to this particular car. Alright, so property is movable, ownership obviously is my car, and I'm going to drive it. Possession is of the borrower. LIC policy, remember this assignment. For assignment, remember insurance policy. Now from the example, try to derive the meaning. So basically, I am transferring a right of an asset, alright, to another party with the contract that if the other part, that if I default, then the other party can cancel. I mean, can encash the policy, alright, can encash the asset. Correct. So assignment represents a transfer of an existing or future right or property belonging to a person in favor of another person. Yes, yes. So please remember this word, transfer of a right. Okay. Set off. I'll come to that set off later on. First, let me clear mortgage, pledge, hypothecation, assignment. I've cleared it very clearly with the examples and stuff. Alright. Mortgage, home loan, pledge, gold loan, hypothecation, car loan, assignment, policy, mortgage, home loan, pledge, gold loan, gold loan, gold loan, gold loan, hypothecation, car loan, assignment, policy. Alright. Okay. Now, more English. Now, when it comes to mortgage, there are 2 types of mortgage. One is where I will just give the documents of my house to the bank Bank will give me the loan. We will sign a memorandum of understanding. Done. That is called as equitable mortgage, but I have given some right to the bank. Delivery of title deeds or the documents of the title with intent to create security thereof. However, many borrowers were creating, fake mortgage by cheating the bank. That is why government came into picture. There is a legal mortgage deed, like how you have partnership deed and stuff. There is a legal mortgage deed which we can register with the registrar, that is in the government records, all right, and then go for the mortgage. So affected by registered instrument called mortgage deed signed by the mortgager, it registers the property to the mortgagee as a security. Okay, yes. Pledge, delivery of goods. So gold, yeah, delivery of goods by the borrower to the lending bank with the intention of creating charge thereon as the security for advance. Hypothecation, car loan. All right. So borrower periodically submits statements. Achha, now in a practical life, you will see that hypothecation is used for stock, inventory. So inventory is a movable product because we are talking about businesses, right? It's a movable product. Yeah, it's there in my godown. I'm going to keep on submitting 3 month, 6 month statements. All right. Every 3 months, I'll keep on submitting statement to the bank that as of now I have this inventory, and they'll keep on giving me the loan. All right. So if I don't pay the loan, they have the right over my inventory. Okay. Just like car loan, but instead of car, think about inventory. The borrower periodically submits statements regarding quantity and value of hypothecated assets to the lending banker, on the basis of which the drawing power of the borrower is fixed. Assignment wages, read it. Set off. Statutory. Achha, what is set off? Come on, man. Tell me. In the same bank, if I have a loan account and if I have a deposit account, correct? Then if I stop paying the loan, then obviously bank has a right to set off. Very simple. Statutory right of a creditor to adjust wholly or partly. Okay, I have an account in bank, so bank will say that the debit balance in my account, all right, against any credit balance lying in another account of that same particular debtor. So they can set it off. So bank, what will do? It will combine 2 accounts, deposit account and loan account of the same person, provided both the accounts are in the same name and the same right. Yes, sir. Yes, sir. Okay.
Lian. What is lian? Right to retain. Right to retain. Right to retain. Right to retain. Right to seize. Right to seize. Right to seize. All right. So lien is a creation of legal charge with the consent of the owner, which gives lender a legal right to seize and dispose, liquidate the asset under lien. All right. I think this you have studied in your Indian contracts. You should not be a big problem. Yes, sir. Yes, sir. Yes, sir. So please remember this mode of creation of security. I'm expecting in MCQ that also application based, proper application based questions. Yes. All right. Now, obviously we need to discuss about non-performing assets. But for non-performing assets, I have created the best possible notes. All right. And if you look at those notes, you will easily understand the discussion of non-performing assets. Okay. But this is very critical. So we will quickly go through these notes. Okay. Now, bank gives a loan to Mr. A. Mr. A gives installments to the bank. Installment, bank will recover principal and interest both. The simple thing is, what if Mr. A stops paying installment? What if Mr. A stops paying installment? Then we say that asset has stopped generating income. It could be a non-performing asset. Now, RBI, how do we classify an asset which has stopped generating income? How do we say that, okay, this is a non-performing asset? If it remains overdue for more than, yeah, you may be knowing the general rule, overdue more than 90 days. I'll come to that. But I want you to speak proper English. RBI has prescribed IRAC norms. IRAC means Income Recognition and Asset Classification norms. Based upon these norms, banks are required to classify and recognize NPA. So, students should know 2 things. First, when is an asset classified as NPA? That is given in your IRAC norms. Second, एक बार asset NPA हो गया, once the asset becomes an NPA, what can be the impact of NPA on the financial statements of the bank? So 2 things. One is the classification criteria. Second is impact of NPA on the financial statements of the bank. All right. So the very first thing that we study is the classification criteria. General criteria, if installment remains overdue for more than 90 days. All right. But I hope you remember this. If it is overdue for 0 to 30, then it is SMA, special mention account 0 category. If it is overdue for 31 to 60, then it is SMA 1. And if it is overdue for 61 to 90, then it is SMA 2. But don't worry, we'll talk about that. I have it in my notes. All right.
But when it remains overdue for more than 90 days, then we don't say it SMA, we call it as NPA, non-performing assets. All right. Now, for agriculture advances, for loans given to the farmers, agriculture advances for cultivating crops, there is a different rule. We don't have the rule of overdue more than 90 days. So please be careful. The moment you get a question on agriculture advances, the first thing that you will see is that whether the loan was taken for crop cultivation or not. Because for any other purpose, it is not available. Not for tractor and stuff. Alright. But somehow if it is connected with crop cultivation, then fine. Alright. So loan should be taken for crop cultivation. There should be some hint that it was taken for crop cultivation. Alright. Or they will just say simply agriculture advances. Then you will have to see which crop was cultivated. कौन सा crop उगाया? Which crop was cultivated? Whether it was a SDC means short duration crops and LDC means long duration crops. Wait, but how will we come to know in exams which crop is SDC, which crop is LDC? Alright. Because if we don't know this, we can't move ahead. Don't worry, they will give it to you. They will give it to you. Alright. But if they don't give it to you, listen to me. LDC and SDCs have been defined. Long duration crop is a crop which has crop season more than 1 year. Now bloody, what is crop season? Relax, you will come to know, don't worry. This is like opening a box within a box. Alright. So this is when the seed is sown and this is when the crop is ready, and now I will cut the crop. So this is called as from seed sown to crop collection. This is called as period up to harvesting. If you want it in Hindi, then उगाने से उखाड़ने तक. Alright. So that is called as period up to harvesting. If that crop season is more than 1 year, then it is long duration crop. If crop season is within 1 year, then it is a short duration crop. Alright. So if loan is taken for short duration crop, then after the installment date expires, bank will wait for 2 crop seasons. That 2 times you can harvest. Alright. At least after that you please pay. So if installment remains overdue for 2 crop seasons and still it is not paid, then it will be classified as NPA. In case of long duration crop, if installment remains overdue for 1 crop season, anyways long duration crop has crop season more than 1 year. So it's a large period that bank is waiting. So if it installment remains overdue for 1 crop season, alright, then in that case, it will be classified as a non-performing asset. But you know that farmers suffer the most due to natural calamities and stuff, and that is the reason that in case of natural calamities which are recognized by RBI, banks can provide relief on their own. And in practical life, this long duration crop, short duration crop list is given by the state level bankers committee of each state. Alright. Yes sir, yes sir. So that is it for your agricultural advances. We are just learning as of now that when a particular loan or advance is classified as a non-performing asset. Alright. Now CCOD. Cash credit and overdraft, these are short-term working capital loans given to the borrowers, generally traders, manufacturers. Alright. Now I have just explained that how the whole business works. So I am not reading every single line. So X Limited will give a security, of its current asset, and bank will calculate the drawing power, and then bank will provide a working capital loan. But listen to me very carefully. This calculation of drawing power is a very important line. Alright, and there can be a practical question. That is why I've said that please solve the question on page number 10.35 of the module. Alright, so if you go to page number 10.35 of the module, you will find the question over there. Yeah, over here. So this can be your examination question when it comes to drawing power. Alright. So whatever are the stocks minus जो भी stocks under obligation वगैरह, they will minus it. Alright, the stocks which are unpaid and stuff. Alright. Then they will say that okay, for this much of inventory, the client has actually paid. Alright, the borrower has actually paid for this much inventory. Then bank will keep a safety margin, and then they will come to this drawing power value. Alright. Similarly for debtors also, they will minus it and come to drawing power value, and then they will say this is the total drawing power. And this can be asked as an examination question. Please be careful. Please be careful. Alright, it has always been one of their favorite. Alright. Now you know what is drawing power, but I need to teach you more. Listen to me. Do you think that X Limited would have taken only cash credit overdraft from the bank? X Limited would have taken so many other facilities also from the bank, other types of loans and stuff to finance their trade. Yes or no, sir? Yes. Now listen to me very carefully. CCOD, whatever is the drawing power, plus other types of finances taken from the same bank by X Limited. total amount is the sanctioned limit. So sanctioned limit is the maximum exposure that bank is ready to take against X Limited. कि X Limited को इसके ऊपर नहीं देंगे. Alright. So sanction limit is the maximum exposure that bank is not ready to give more than this to X Limited. It is the maximum exposure that a bank is ready to take against a particular borrower. So that is why this can also be asked as a proper application based MCQ. Alright. Now you know the business. Now it becomes simple for me. NPA criteria for classifying CCOD. Now this cash credit and overdraft account, when it will be classified as NPA, please be careful. As on 31st March, whatever is the amount withdrawn by the borrower, if it is more than the drawing power, then they will see that ये कितने दिन से हो रहा है, since how many days this is happening. If it remains overdue for more than 90 days, then it will be classified as non-performing asset because amount cannot go beyond drawing power. But if it still goes beyond drawing power, and if it remains overdue for more than 90 days, then it will be classified as a non-performing asset. If amount withdrawn remains within the drawing power, so let us say here the drawing power is 780 crores, for example. Let us say that amount withdrawn remains within 780 crores. However, bank will keep on charging interest, na? Then borrower should pay the interest. Let us say borrower is withdrawn. It is within the drawing power, but borrower is not paying interest on that. So if the credits are not enough to cover the interest charged, or there are no credits on it for more than 90 days, then this is not good. Then it is a non-performing asset. But once the bank puts a debit entry that okay, now you have to pay the interest, you have to pay the interest. If you don't pay that interest amount also for more than 90 days, then you will be tagged as a non-performing asset. Am I clear with this? Yes sir, yes sir, yes sir. Now many students ask me that, sir, how amount withdrawn can be more than the drawing power? Let me tell you that for good customers, banks, what they do is they give an additional 20% limit beyond the drawing power or sanction limit for a maximum period of 90 days. So for the good customers, they do this. Then the good customers don't pay it and it remains overdue for more than 90 days. Then it is tagged as a non-performing asset. Yes sir, yes sir, yes sir, yes sir. Alright. Now over here, borrowers are required to submit current asset statement once in 3 months and drawing power is calculated from the statements. But if the statements are older than 3 months, then let me tell you it is irregular, and once it is irregular, then it is a non-performing asset. Alright. One more thing that you need to understand. For the borrowers, जिसका drawing power is more than 5 crores, that means the funded exposure is more than 5 crores of the bank. Bank sends chartered accountants to the premises of the borrowers. That hey, chartered accountant, go to that borrower's premise. And see what is the stock position of that borrower. So stock audit is done of the borrower by the bank if the funded exposure is more than 5 crores. This also is a proper MCQ. So one more time, when it comes to CCOD, you are going to promise me that you will read every single line of these notes properly. Yes sir, yes sir, yes sir. Okay. Now this particular point, okay, is an additional point which I have written. If you want to go through this, it is okay. Otherwise, even if you ignore it, then also it is fine. Not a problem at all. Yes sir. Okay, and this particular point number 13, that is from the module or even from my textbook, computation of drawing power. Alright, please go through this point properly. Just read it once because this is a very sensitive area. Although it is covered in my discussion, but still it is my request, humble request, you please go through that once. Yes sir. Okay. Now I just taught you that boss, एक NPA कब होता है? Overdue more than 90 days, general rule. Agriculture advances, long duration crop, short duration crop. Short duration crop, installment remains overdue for 2 crop seasons. Long duration crop, installment remains overdue for 1 crop season. Alright. Then, when it comes to CCOD, I taught you the whole business that it is taken against current assets and stuff. Yeah. The drawing power calculation. And the main NPA criteria is that if the amount withdrawn is more than drawing power, it remains overdue for more than 90 days NPA. If amount withdrawn is within the drawing power and the credits are not enough, there are no credits or credits are not enough to cover the interest charge. Alright, if it remains overdue for more than 90 days, then NPA. Yes, yes. Now NPA classification is done. Now what will be the impact of NPA on the financial statements of the bank? Okay, now this asset is NPA. Now what to do? What will be the impact on balance sheet P&L? Alright, so look at this. Impact of NPA on the financial statements of the bank. Bank has given a loan to Mr. A of rupees 100. Let us say bank has charged interest of 10 rupees. and Mr. A stops paying installments. It is overdue for more than 90 days. Now what will be the impact of this on the bank's balance sheet and P&L? There are two impacts on the financial statements. First is income recognition. Let me talk about this 10 rupees. It was booked by the bank but not paid by A. So it was booked but not realized. The entire amount, the whole amount which was booked but not realized, the income amount must be fully provided for. That means there will be a reversal in the income of rupees 10. And further income will be booked on receipt basis. And for this rupees 100, there has to be certain provision, because it is a doubtful recovery now. Alright. So when it comes to 100, there will be some asset provisioning. Now what will be the percentage of asset provisioning? My God. RBI has prescribed dash percentage provision on the amount of asset. I will talk about it. Alright. What will be the percentage provisioning? Over here. Yeah, relax. Everything is there in these notes. Asset provisioning is based upon the following classification. Let us say Mr. A was regularly paying installment. Then it is regularly paying, then it is standard asset. Then it is 0.4 percentage provision. Mr. A defaults. Amount is overdue. This overdue up to 30, 31 to 60, 61 to 90, it is SMA 0, SMA 1, SMA 2. The provision amount need not be increased. It can remain at 0.4%. However, when the moment it becomes more than 90 days NPA or agriculture advance wala NPA or CCOD wala NPA, the moment it becomes NPA, then straight away from standard asset, it is classified as substandard asset. Now please be very, very careful. Once the asset meets NPA criteria, it is classified as substandard asset. So the moment asset enters into NPA territory, it is substandard asset. Up to 12 months, it will remain substandard. So today, if you become NPA, for 12 months, you remain substandard. Then beyond 12 months, you become doubtful. Then doubtful up to 1 year, doubtful more than 1 year, up to 3 years, or doubtful more than 3 years. Right? So SS category, then D1, D2, and D3. Doubtful more than 3 years. Yeah. This was just clear classification of the asset. Okay. After becoming NPA, how it is classified. And if the bank feels that there can be no recovery over here, then it goes into the last category, that is loss asset. Okay. Now listen to me. Percentage provisioning is based on the amount of asset based upon this whole classification of the asset, and that is why I have given a module page number 10.28. It is also there in my book for my in-house students who are studying. Alright. Okay. But if we go to the module, then over here, once you say substandard asset, 15%, doubtful asset, alright, D1, D2, D3. The moment you said doubtful and unsecured, 100%. Substandard, whether secured, unsecured, whatever it is, keep it at 15%. Actually, for unsecured, it is 25, but leave it. It's not given in the module. So, substandard, whether secured, unsecured, whatever it is, keep it at 15%. Doubtful asset, D1, D2, D3. The moment you say unsecured, 100%. Loss asset, 100% secured, unsecured, whatever it is. The only technical combination can be doubtful and secured. So, D1, 25%, doubtful up to 1 year. D2 40% and D3 100%. Alright. And if you want to revise again, then you just look at my notes and it is very clear. Up till here substandard, then doubtful, then D1, D2 and D3. I mean doubtful up to 1 year, 1 to 3 years and more than 3 years. Alright. And if you want, you can write on your own also once so that you feel better. If NPA notes you are writing once on your own, you will really feel great. Alright. And there are high chances of this being in the exam. Yes sir, yes sir, yes sir. Alright. Now look at me. Now we are going to go through some special adjustments. Let us say Mr. A has taken so many loans from the bank. Okay, Mr. A has taken all of these loans from Axis Bank. And let us say Mr. A defaults in just one loan. Just one loan. And it is overdue for more than 90 days. Mr. A is regular in payment of all other loans. He has just defaulted in that one loan. Then whether the entire loan portfolio of 75 lakhs will be considered as NPA or only this home loan where he has defaulted will be considered as NPA. The answer is that entire 75 lakhs will be considered as NPA because NPA classification is borrower wise, alright, and not just facility wise, not just loan facility wise. Let us say if Mr. A has taken one more loan, business loan from SBI, and Axis Bank has classified Mr. A as NPA, alright. Then just because one bank has classified it as NPA, the second bank SBI is not under any compulsion to classify it as NPA because every bank will go as per its own experience of recovery from the borrower. Am I clear with this? Yes sir, yes sir, yes sir, yes sir. Alright. Then second special adjustment. Let us say Mr. B has kept FD with the bank, fixed deposit. Either FD, National Savings Certificate, Kisan Vikas Patra, Indira Vikas Patra, life policies. Basically, it is proper plus amount that they have kept with the bank. Now against this FD, all right, bank has to pay interest of rupees 6. So Mr. B has given FD, bank has to give Mr. B 6 rupees interest. Now let us say Mr. B takes loan against FD from the same bank. Mr. B takes loan against FD from the same bank. The loan is 60 rupees, interest payable is 6. So Mr. B has kept FD and has also taken a loan. If you see, the loan amount and the interest amount that is payable is fully recoverable from the FD. It is fully secured against FD. Now Mr. B defaults in loan repayment and it becomes overdue more than 90 days. Can I say that you just learned from me just 15-20 minutes back that bank can recover this amount by using set-off technique? Yes or no, sir? Yes, sir. Then tell me, can I say bank is fully secured with proper liquid amount over here? Yes. That is why, listen to me. This 6 rupees which bank is earning from Mr. B, normally when Mr. B becomes NPA, we will say that this 6 rupees you have to reverse. Here there is no need for such reversal because this is fully secured. If it was not fully secured, then the amount needs to be reversed. So everyone over here, don't think too much, just cover the points which I am covering in the revision session. Bank can continue to recognize income from Mr. B on accrual basis because loan taken by Mr. B is fully secured against FD. Yes sir, yes sir, yes sir. So जो दो impact आ रहे थे, there were two impacts, right, of NPA. One is income recognition and asset provisioning. So this will be not required. This will be not required in this particular point. So it almost acts like an exception over here. Alright, when the loan is fully secured against term deposits. When the loan is fully secured against term deposits. Okay? Yes. Third adjustment. Mr. C has taken a loan from Axis Bank. Two cases. One, loan is guaranteed by central government. Second, loan is guaranteed by state government. Now, when loan is guaranteed by central government, and if the borrower defaults, and if the bank calls that particular borrower NPA, then Modi ji is going to look at you, that I have given the guarantee. Modi ki guarantee. Alright. So look at this. If loan amount is 100 rupees, interest booked but not realized is rupees 10. Mr. C defaults, amount is overdue for more than 90 days. If loan is guaranteed by central government, then in that case, bank will not classify Mr. C as NPA. If loan is guaranteed by central government, that is case 1. Alright. So asset provisioning, rupees 100. It will be done as per standard asset only, 0.4%, that's it. But listen to me very carefully. There are two impacts of NPA. For asset provisioning, it will continue to be treated as standard asset. However, the fact remains कि पैसा नहीं आया है. The fact remains that the money has not been received. And there is some uncertainty because government may pay after 4 years, 5 years also. That is why income booked but not realized must be fully reversed. This is the biggest adjustment. Please be careful. If loan is guaranteed by central government, income booked but not realized, that is the 10 rupees income booked but not realized, must be fully reversed, fully provided for. Further income will be recognized on receipt basis. However, for asset provisioning, it will be continued to be treated as a standard asset. Yes sir, yes sir, yes sir. And this exception is available only in case 1, that is central government, not in case 2, that is state government. For state government, the loan will be treated as a normal loan only. Yes, 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 yes. There is one word in the module, consortium arrangement. What is consortium arrangement? Group of banks giving a loan. Alright. So let us say if Mr. A transfers funds to bank 1. Alright. So you see, I have given this example. Bank 1, 2 and 3, all of them come together and give a loan to Mr. A. This was written very fast in the lecture. So bank 1, 2 and 3 come together and give loan to Mr. A. Then this bank 1, 2 and 3 is consortium. And all 3 banks will decide one leader. Let us say bank 1 is the leader. Mr. A transfers funds to the leader. Alright. Basically the repayment of installments and stuff. And this bank 1, the leader is supposed to transfer funds to the other bank. Alright. Let us say bank 1 has received money from Mr. A. I repeat, bank 1 has received money from Mr. A. But bank 1 is not transferring it to other banks. So banks 2 and 3 are not receiving their share of installment. Then bank 2 and 3 will have to classify Mr. A as NPA. Because every bank has to go with the record of its own recovery. I hope I have made myself very clear. That is why normally in consortium what happens is Mr. A will pay the share of their respective banks, the share to the respective banks only, alright, instead of paying it to one bank. Yes, 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 sir, yes, sir, yes, sir. Okay, done, done. Now when we look at the module, there is one very important adjustment called as erosion in the value of security. Another special adjustment. Let us say Mr. D has taken loan of rupees 100 and security of rupees 150 from Axis Bank. Loan of 100, security given to the Axis Bank was rupees 150. Let us say Mr. D defaults in repayment. Mr. D defaults in repayment. Now case 1, when Axis Bank sent its officers for revaluing the security and stuff, and they saw that the revalued amount of the security is only 70 rupees. My God, loan of rupees 100, now amount of security becomes only 70. That is the only value. So there is a very big erosion in the value, because earlier security value was 150, now it is 70. So the erosion is more than 50%. Look at this. That means the security value is less than 50%. Reduction, erosion is more than 50%. So the value is less than 50%. Alright. In this case, but whenever we classified NPA, first it is substandard, then doubtful and stuff. But no, in this case, Mr. D will be straight away classified as doubtful asset because of this high reduction, erosion in the value of security. Yes, sir. Yes, sir. Case 2, security value reassessed. And let us say security value is of rupees 7 only. Alright. Oh. Now rupees 7 is not enough to cover even 10% of loan. See, in the first example, I was comparing 70 with 50, 150. So I was comparing the security value with the earlier security value. In the second example, I am comparing security value with the loan amount. If you see, 7 rupees is not even enough to cover 10% of the loan, and that is why in the second case, alright, Mr. D will be straight away classified as loss asset, not even as doubtful. This is a very sensitive adjustment for application based MCQs. Now normally bank audit, people end up ignoring this chapter. At finance level also students don't do this chapter properly, and 10 marks MCQs were asked. So I hope that you are doing this chapter properly, bank audit. Yes sir, yes sir, yes sir. Alright. Now when we move ahead, alright, in these notes, I have given one note that there is a very theory kind of question, audit of advances. Now if you get a normal question on audit of advances, then 1 point on documentation, 1 point on authorization, 1 point on security, 1 point on recovery, alright. As a 4 or 5 points you can mix and match and you can write it, alright. But if you get a question on audit of internal control over advances, so not overall advances, just the system of advances, alright, then you have to think about the process. For advance, someone will first submit an application, that application will be screened, the credit worthiness of the borrower will be seen. So you have to discuss the process in detail and keep on saying check whether the sanctioning of the loan, disbursement of the loan, utilization of the loan, alright, booking of the security. So you have to keep a calculation of interest. You have to keep on talking about the whole process. Alright. So these are two different answers: audit of advances and audit of internal control over advances. I have given the module page number references because I'm shooting a pan-India video over here. Alright. Although both of these questions are also there in my textbook. Yes, yes. So you can just read once if you want to. Okay. Done. With that, we are done with the discussion of advances part, and now very little part is left. Alright. Audit of income and expenses in case of banks. Alright, what you have to do is you have to just apply your common sense when it comes to audit of income and expenses. Alright, you have to talk about the documents that you will verify, the accounting treatment, the internal control, general checklist you are supposed to apply. However, there are some very sensitive points when it comes to audit of income of the bank. Alright, so please, I know the module questions, that is why I'm telling you, listen to me. When it comes to income audit, so bank's income is divided into interest earned and other income. So just go through this list once, that what is covered in interest earned and what is covered in other income, because there you may end up committing some mistakes. For example, if bank is purchasing the bill and at a discount, then that is interest income for the bank, not commission income. So these small things you have to be very careful. Alright. When you look at other income, all right, you should be able to understand, acha, ye commission income hai, all right, loan processing income, this income, that income. That is all other income. Okay? Okay. So please be careful. Huh? Just go through this list once so that there is no problem. Okay. Now, look at this. Interest earned by way of dividends. Interest earned by way of dividends, it is not covered in interest income. Look at this. It is covered in your other income. You see this profit on sale, profit, it is covered in other income. So I am requesting that please go through this because they are asking an MCQ on this, which is covered as interest income, which is covered as other income and stuff. Then when it comes to expenses of the bank, there are three types of expenses: interest expense, operating expense, and provisions and contingencies. Just go through the list once, all right? Because what I feel is that depreciation, you may call it as provisions and contingencies, whereas it is actually an operating expense because bank is operating, right, the assets, and that is why there is a depreciation, all right? So please be careful. Just go through the list once. Accounting knowledge, just go through the list once. Just read the list once, all right? Now, when it comes to audit of income and expense, when it comes to audit of income, these are some sensitive points. I'll be very quick with this. Let us say interest, fees, and commission. Let us say interest is 97, fees is 2.5, and commission is 0.5. Normally, income is recognized on accrual basis. Accrual ka matlab kya hai? When it is earned rather than when it is received. All right. However, if the income is less than 1% of the total income, then in that case, it can be recognized on cash basis. No need to recognize on accrual basis. So this can be one MCQ. All right. Then when it comes to non-performing assets, there will be income reversal and further income will be recognized on receipt basis. So you can write those NPA income recognition points also if you're asked about audit of revenue. Then there is one interesting adjustment of takeout finance. All right. Now what is this takeout finance? See, let us say L&T infrastructure. All right. This is a new concept added in the module, so I'm expecting that there can be a question on this. Let us say L&T infrastructure was earlier financed by Axis Bank, 150 crore project. All right. And now L&T infrastructure approaches SBI. It requests SBI, SBI, please take me out of this. All right. So SBI will discharge this loan and take out this particular finance. So it is nothing but the loan is shifting hands from one bank to another bank, all right, and that is takeout finance. It is a provision for, this offer, this scheme is for big infrastructure projects to ensure that no one bank has to go through liquidity problem, all right. So to increase the liquidity, to manage the liquidity, to give boost to the infrastructure development projects, all right, that is why we have this takeout finance. So please read this, and I told you that where it is used also. So they can ask you a 3 marks question on takeout finance. Now audit of expenses, calculation of expenses, processing of expenses, then authorization of expenses, main expense is interest expense, so the interest rates and stuff, all right. You will talk about that and you will finish your answer. So there is no great MCQ kind of question when it comes to audit of expenses. Otherwise, general accounting principles always should be clear, all right. As an audit professor, I cannot go too much into this. Yeah. So that is it with respect to your audit of banks. If you are with me up till this minute of the video, write it with confidence that, sir, I have seen it till the end. All right. And do leave some good comments if you liked the particular effort over here. Now, just one thing. After you are done with this particular revision session, you can solve this particular case study. You can solve these MCQs and these questions. All right. After that, just relax. You are done with audit of banks chapter. In between, there are some test or understanding illustration questions. Just solve it and come on. We are going to score full marks, nothing less than full when it comes to audit of banks. Yes, all the very best. Thank you.